Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 7 Common Financial Frauds and Scams. Mike, the big one that people tend to focus on, and it's an important one, is identity theft. Let's first define what identity theft is.
Yeah, well, I think it's also fairly misunderstood because some people have a vision of, a big criminal ripping off your identity, and it's not usually done that way. But identity theft is using someone's social security number or, identifying their bank account numbers to be able to imitate them and therefore gain access to their funds in some way, shape, or form.
And there are some things that people can start to do in order to potentially protect themselves against identity theft, but it's a hard one because there's so many different potential entry points.
Well, there's been so many data breaches too, right? If you work for the federal government, your information's been breached. If you have ever had anything through Experian, you've been breached at some point in the past. And so if somebody really wants to buy your social security number, it's unfortunately not terribly difficult to do. But obviously storing documents in a safe place so they can't be misplaced, being careful and not using things like public Wi-Fi is a big one to avoid using. And then skimming credit card information is very common these days. And so to the extent you're able to not swipe a credit card, instead use the pay to touch, that can help things along when it comes to avoiding this.
Our guide is titled The 7 Common Financial Frauds and Scams, and the way to request it is by calling 800-393-4001. Again, it's The 7 Common Financial Frauds and Scams, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
If you thought that this was going to be the first full week of trading for 2024, you're wrong. Market's going to be closed on Friday on Thursday.
Yeah.
In observance of the final day of Jimmy Carter's state funeral. And so we still cannot get to a full week of trading. Third week in a row that we do not have a full week of equity trading, at least in markets. It's Chuck, Mike, and Tucker with you. And so that obviously does, disrupt the trading schedule. I know that's not really the thing we should be concerned about. Generally with a funeral, there's one thing that you should be concerned about, and that's paying respect to someone who's had a life well lived. And so that is ultimately the important thing.
It's a weird series of closures, too. So you've got the stock exchange closed, the bond market is open but closes early, banks are open, the post office is open but closing early as well, I believe. So
jobless claims data is going to be on Wednesday instead of Thursday now. So even the BLS getting in on it.
Government agencies are closed. Yep.
Yeah. So you've got some stuff. They still have Fed speeches scheduled for Thursday. There's 5 of them.
Yeah.
And I'm pretty sure
not
they
really
won't,
a government agency. So yeah,
I'm pretty sure they weren't invited to speak at the funeral. So who knows what they're going to be talking about? But again. This is my first day back in 2025.
All fired up.
And you got to have 5 Fed speakers on the day of an ex-president's funeral? Are you kidding me?
Read the room, people.
You can't push them to Friday?
Yeah, read the room.
What are we doing here? But in any case, so in terms of things to actually watch this week, the big one is going to be the jobs report on Friday. We're going to get it at 8:30 a.m. Previous jobs report, just as a recap, 227,000 jobs created. But the Unemployment rate moved up to 4.2%. That's because these are two different surveys that produce those two different results.
They are.
Consensus estimate right now, between 160 and 200,000 jobs created, with the unemployment rate being at 4.2 or 4.3. That's what the expectation is for this jobs report here.
So, looking top down for, a general view of the labor market would be that's pretty darn good. Hey, you're creating jobs in the 200,000 range and the unemployment rate is sticking around 4.2%. Interestingly, what markets seem most concerned about today happens to be interest rates. We've talked at length about where the 10-year Treasury has gone, where mortgage rates have gone. If you get a crummy jobs report this Friday, might you see yields moving and equity markets moving up? Quite possibly. So we're back into this mode of bad news might be some semblance of good news, although I don't ever like to see deterioration in the labor market.
No, and the question is, which job market do we get? Because from April through August, that 5-month reporting period, 4 out of those 5 jobs reports showed fewer than 150,000 jobs created.
Yeah.
Which is where you start getting concerned. You start floating around like 100,000, 98,000. You had a 78,000 in August. You're kind of like, this is, approaching stall speed. The last 3, you've gone 255, 36. Remember, October was when we had the hurricane, so we kind of tossed that out. And now 227. So the question is, okay, if you average that 227 and 36, which I think you kind of have to because, we talked about how the October number was hot garbage for, hurricane-related reasons. Okay, you're still at like 125,000 on average there. And so you've got this one outlier to the upside in September. And other than that, it really has not been impressive for the last 6 months now.
Right. So when do you start labeling this as Trump's fault? Because I was talking to Vinny Penn the other day, and he was saying...
Oh, we already have to get into that on
I think so,
the third, business day of the year. We're already getting into, who's to blame for this?
Vinny Penn was telling me that he posted on Facebook or Instagram that his Dunkin' coffee went up by 11 cents, and somebody commented, "Welcome to the Trump economy." And he found that quite humorous.
We still can't do thanks, Obama?
Yeah, I mean, sure.
I'm kind of hoping we can do that for our entire life. It's just like a nice meme that continues, or I don't know.
So in any case,
thanks, Lincoln.
There will be some Fed speakers this week. There will be a few other data points, but really what matters out of this week is the Friday jobs report. That's the end-all, be-all for this week in terms of its impact and effect on the overall economy and markets for what we are looking for this week.
Yeah, I think everything else, as you mentioned, is going to dovetail off of what we get in that report. Now, granted, you do still have some significant volatility in markets right now.
Sure.
Just as an example, you take a look at what we saw, and granted, this was on very low volumes, but you look at what we saw last week, and the last day of 2024 saw a 2 percentage point swing from high to low and closed in the middle of that range. You saw a significant upward swing on Friday. There's some volatility out there, but despite that, we get back to my favorite Shakespeare quote. This market has been full of sound and fury, signifying nothing. It has been within a 2% trading range since the election. It has not gone below 5,800, actually about call it 3.5% range now. It's not gone below 5,800 or above 6,100. It's just hanging out there. And spent most of its time really between 5,900 and 6,000 in about a 2% range. And so you look at this and you say, what do you make of this market? And the answer is, hey, there is no catalyst driving it forward at this point. The story that has driven the last 12 months has been, hey, people thought that 2024 was going to be, potentially a crappy year with slow growth. The growth has been fast and earnings have been good. And that's driven markets, and earnings expectations have expanded as well.
So let's define that, because I was asking Paul this as well. Going into 2024, it seemed to me that the expectation was for, let me think about the risk to the 2024 economy was, do we get that recession that people were worried about since 2022?
We talked about it heading into Q4 of 23,
Yep.
where we were entering that tipping point, and the data that we got in Q4, you and I said, hey, this is good enough, the recession's not going to be here, and the market picked that up over the course of the year.
And the excitement about 2024 was, we've got, some companies that are doing some really innovative stuff on artificial intelligence and, a lot of different growth in terms of, a market that can continue to chug along there, but with that tail risk of recession. If we define the narrative going into 2025, how do you see it, Chuck? Because I see it as investors taking a look at 25 and seeing enormous opportunity from deregulation, tax cuts, with a tail risk of inflation, I think, is the overall narrative. And so if I think of that wall of worry that you need to climb in order for markets to surprise you to the upside again, it would be, okay, do you get some of those positives without that inflationary tail risk?
Yeah, I think ultimately I look at, hey, what's projected for earnings growth? Because as good friend Larry Kudlow likes to say, earnings are the mother's milk of stocks. Calendar year 2025, FactSet, which is a data aggregator, consensus earnings estimate growth is at 14.8%. So it's saying, yeah, you are going to see like some steep earnings growth. Like that's fast. If you look at the long-term historical average for earnings growth, it's half that. It's less than half that, actually. It's around 7%. And so actually I think it's around 4%. And I'll get into it later. But this is projecting a really fast year of earnings growth. And the risk is that for whatever reason, that doesn't develop. Because you're priced right now, sitting here today, and this was on January 3rd, so it was Friday. Forward PE ratio for the S&P 500, so S&P price divided by next 12 months projected earnings, was 21.4x, which is steep.
Yeah.
Okay, it's a steep valuation. Doesn't mean that, things fall apart tomorrow. I've said this before. Valuation is a horrible predictor of what's going to happen, in markets. They can remain,
at least in the short term.
Yeah.
Medium term, it can be
medium to long term, it can be
predictor.
more predictive, yeah.
But yeah, short term, kind of useless.
So ultimately, you look at this and you say, okay, it's a steeply priced market with high expectations for earnings growth. If something causes that to falter, and that something could be higher inflation, lower margins, lower sale, like whatever it is, recession, you can play out a million different things. Boat getting stuck in the Suez Canal.
Sure.
Weird stuff happens. We know this at this point. The risk here is that, hey, those earnings projections have to come in and that multiple needs to come in. And so you end up with a potential downturn as a result of it. Do stock market downturns last forever? Generally, no. I say generally because I leave open the possibility that there's something we haven't seen yet, because you never know what you're going to get. But generally, no, they don't last forever. So, again, this is the stage with which we're entering, 2025, and we've got a wide range of outcomes here because you've got policy uncertainty on the Fed side. No one quite knows what the Fed's going to do this year.
Sure.
And on the fiscal and trade side of things, you got a new administration that starts 2 weeks from today, and we're still searching for clues as to exactly what policy is going to be implemented. Washington Post was out with a report today. Hey, Trump administration is considering tariffs on all countries, but targeted at a few, small areas. Trump comes out with a tweet. Washington Post is lying. They don't know what I'm going to do. So, yeah, we don't know what's going to happen right now, and we need a little bit of humility as a result of that. Let's take a quick break here. When we come back, we'll talk about what is going on in the job market right after this.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks. But in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston, where you can make a donation today and support such programs as the Veterans Transportation Program, which takes injured vets to their important medical appointments. That's dav5k.boston.
Piece from the Wall Street Journal. Unemployed office workers are having a harder time finding new jobs. This meshes with the data and stories that we've been seeing over the past really like 9 months, I think, probably since like the start of Q2, in that people are reporting staying on unemployment longer. They're having a harder time finding new work. And this is, I think, the main evidence that we have of the slowdown in the labor market right now, because the unemployment rate, even though it moved up last month, it's kind of stabilized over the last 4 or 5 at least. There's no clear trend there right now. And we're not seeing an uptick in new unemployment claims. It's just people are unemployed
stagnant.
Longer. Yeah.
It's stagnant is the word that I've used a few times now. And, the stats behind this, more than 1.6 million of those jobless workers that are out there. There's 7 million people who are unemployed. 1.6 million are saying that it's taken them at least 6 months. So they've been unemployed for 6 months or more. And that's a big number in recent history. That number's up more than 50% since the end of 2022, that portion of, or that number of workers who have been unemployed for 6 months or more. We're seeing it in a few concentrated areas, but some that I think would find surprising, like certainly if you work in recruiting for tech, it's been a tough time to find work, but really across the board in a few specific areas, you're not seeing as much hiring. So job postings on Indeed for software development, data science, marketing roles, those are all at least 20% below the pre-pandemic levels of job openings.
Can we talk about something there that
yes,
it struck me recently. What's the main thing that big tech is working on right now?
AI.
And in the places that like big tech is talking about using it, isn't it in those exact workers? So, like, isn't there
software,
this horrible
dev,
thing where,
data
like,
science and marketing rules? Yeah.
Isn't there a horrible thing where the company that you're working for is building your extinction?
Yeah, it's not fun.
Right? Like, isn't that just like wild?
Yeah.
Not like outsourcing, but like, no, we're building things that can write stuff for marketing, handle data science, and like they're building their replacement.
They are, yeah. And
what if those jobs don't come back?
Well, that's the entire promise of artificial intelligence.
I know, but what if this is like the cutting edge of what we're seeing here? And what does it mean over the next decade? I'm not saying that will be the case, but
I refuse to believe that, definitively at least, that what we are seeing here is purely the effect of artificial intelligence yet. Again, evidence starts to stack up, and it's still early on, but it very well could be. The overall hiring rate in the information industry generally, it's 30% below the pandemic. Finance hiring, 28% below the pandemic. That's an area in finance, at least, where I have a tougher time drawing the AI line.
I don't know what falls into that category, because like
investment banking would. I'm sure corporate finance roles at most companies, accounting roles at most companies would account there. So I believe that it might be happening in areas like investment banking to some degree. But generally speaking, from what I have heard, if you are a large bank or financial institution, your approach to the use of artificial intelligence is very conservative and slow right now.
I guess I'm wondering more, finance, does that get wrapped up in like mortgage origination? Because if that does, then how much of that is just because rates are high and no one's refinancing right now?
Yeah. So where you have seen a lot of the job growth over the last 12 months, healthcare and government. That's where, on the government side, it's not as though the total number of employees have greatly expanded over the last 6 years. It's merely that those jobs could not be hired for during the crazy stages of COVID when people were getting wage increases all over the place. Guess what? Government jobs were not getting big wage increases. They lost a lot of people. Healthcare, same story. Big catch-up period of time. A lot of nurses got burnt out and retired, or a lot of people just in the healthcare sector in general moved out during the last 5 years, and they're making up for lost time there. But at some point, you do make up for that lost time, and you cannot... I would assume that government jobs are not going to be the tide that lifts all boats for the next 3 years in terms of jobs.
You wouldn't expect it to be.
No. Nor would you really want it to be, if I'm being honest.
No. So I think the message on the job market that I continue to get is there's no signs of the bottom falling out. But there's also no real sign of improvement there either. I mean, it's just it's very messy and very slow.
Yep.
And I think people are generally hunkering down and saying, "Look, I'm comfortable where I am, and even if I'm not, I can't really find much else." And if you are looking for work, it's a slog right now.
Yeah. And
this is before we even get to, hey, you've started to see residential construction, numbers as far as units under construction dropping the last 6 months, but residential construction employment has not dropped off yet. That's a strange divergence that you don't normally see.
Mm-hmm.
So that I'm trying to, also look at that and say, hey, there is another shoe that hasn't maybe dropped here, but I can't reconcile a lot of this right now. It's still just messy. Let's take a quick break here. When we come back, we're going to do a little bit of Wall Street Watch, and then we're talking a Social Security update right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But but at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are rallying to begin the week as investors ready for a big week ahead, including jolts tomorrow, Fed meeting minutes on Wednesday, and the December jobs report on Friday. At the moment, the Dow is up by 0.6% or 259 points. S&P 500 up over 1% or 68 points. And the NASDAQ rallying big time today, up 1.75% or 349 points. Russell 2000 is up by nearly 0.75% as well. 10-year Treasury yield up by 4 basis points at 4.63%, and crude oil up about 1% higher today at $74.69 a barrel. Several chip makers are seeing gains today after Foxconn, who is a key assembler of NVIDIA and Apple products, reported record revenue for the fourth quarter. NVIDIA up by 5%, Micron Technology shares up by 10%, and Broadcom and AMD are up by 3%. Meanwhile, news out of the media world this morning where Disney's Hulu Plus Live TV will be combined with streamer Fubo, merging together two internet TV bundles, the two companies announced this morning. The venture will be 30% owned by Fubo and 70% by Disney and form the second largest digital pay TV provider after YouTube TV. Fubo shares rallying 160%, while Disney shares up by 1%. Elsewhere, Boeing was upgraded to overweight at Barclays, where the firm said a tough 2024 for Boeing stock could give way for a rebound in the new year on strong deliveries and production. Boeing shares are up by about 0.5%. And as a reminder, equity markets will be closed on Thursday to mourn the death of former President Jimmy Carter. I'm Tucker Silva, and that's Wall Street Watch.
Let's talk a little bit about the Social Security Fairness Act, which was signed into law by President Biden yesterday. This is the bill that basically what it does is it gets rid of the windfall elimination provision and the government pension offset, the WEP and the GPO, that have been in place since the 1980s, when they were put in place to try to
shore up Social Security,
make Social Security more sustainable. So
by Reagan?
Yes.
Okay. Or under Reagan.
Under Reagan.
I don't think he drafted the bill.
People always forget that Reagan actually raised taxes. This wasn't a tax raise, but it kind of was because you ended up paying into the system and not getting anything. Mm-hmm. So by default, it's kind of the same thing. But Reagan, Bush, and Clinton all raised taxes. This was back when we actually dealt with the deficit sensibly. And since then, you've had Bush 2, who cut taxes, Obama, who let some of the Bush tax cuts expire, but not all of them.
Yep.
And then also pushed, a whole bunch of other spending through the Affordable Care Act.
Sure.
And then Trump, who cut taxes. Biden, who campaigned on raising taxes but didn't raise taxes, and in fact added more spending.
Dramatically added more spending.
And now you have Trump coming in saying, I'm going to cut taxes again and hopefully try to manage it based on lowering government spending, but there's not really a great track record of lowering government spending recently.
So if we may, let's spend a minute assuming that some of our listeners have no idea what the WEP or GPO are.
Yes.
If you live in the state of Alaska, Colorado, Louisiana, Maine, Massachusetts, Nevada, or Ohio, listen up in particular, because pretty much all of the state employees in those 7 states do not pay into Social Security while they work.
Correct.
There are many other states where some of those workers do, some of them don't. Maybe the firefighters or cops in your state do or don't pay into Social Security. But here's the deal. Let's imagine for a moment that you are a Massachusetts police officer who worked for the force for 30 years. You worked for the Commonwealth of Massachusetts. You get a pension. You did not pay into Social Security for any of that period of time.
Yep.
You then leave the police force and you go work in private security for the last 15 years of your career because you had a 45-year career. And during those 15 years, you do pay into Social Security for a period of time. Under the windfall elimination provision, your Social Security benefits would be dramatically lowered because you spent 30 years in the public sector, even though, hey, I worked, I paid into Social Security. My Social Security benefit already accounts for the fact that I only spent 15 years in the private sector. It uses an average of my highest 30 earnings years, and so it's already lower because of that. But the WEP hit my benefit and lowered it because of my work in the public sector.
And a lot of times the impact, you're talking like 70 to 90% of the benefit is reduced.
The GPO, the government pension offset, works in a different way. Let's assume here for a minute that you spent your entire career in the workforce, never paid into Social Security.
Yep.
But your husband did. Husband worked in whatever, accounting for a private firm. You would be normally eligible for a spousal Social Security benefit off of your husband's work as a police officer for the state of Massachusetts. You would have that benefit in most cases entirely eliminated because of that government pension offset. Both of those things going away. So in particular for workers in Maine and Massachusetts, I mean, look, everybody knows somebody who worked for the state, and so a teacher, a police officer, a firefighter, like we all know those people, and those people are in particular are going to be benefited a lot by this, and it's going to really reshape a lot of their retirement because in many cases, this is not $20 a month, right?
No.
This is hundreds of dollars a month, if not thousands of dollars in a month in Social Security benefits that are suddenly going to be eligible for starting in 2025.
Actually, before that. So this impacts all benefits after December of 23. So you're actually going to see people impacted by this. They will receive a lump sum check or lump sum payment for all of 2024 to make up that shortfall and then start receiving the benefits, again, basically effective immediately.
So obvious good news if you are affected by one of these eliminations that are no longer going to be in place. Bad news, I don't think we already spelled it out for you. Social Security Trust Fund is going to run out in like 8 or 9 years anyway. This just shortens the lifespan.
Yes.
Not significantly. There's not 20 million workers that are subject to this in one way, shape, or form. It's a relatively small group because, like I said, only 7 states predominantly play to this. But for those that are impacted, it can have a pretty massive change on your overall financial scenario in retirement. And so if you're out there evaluating what this might mean for you, maybe you are currently working as a teacher and have been hesitant to go work in the private sector because of this, or vice versa, you're working in the private sector and didn't want to be subject to one of these, or you're already retired and being subject to one of these and trying to figure out what it means for you. Please give the folks at Armstrong Advisory Group a call. Our advisors are experts on the subjects of Social Security and pensions. We work with clients all the time who are subject to this sort of thing and can help you work through what it will mean for your financial future. Give us a call at 800-393-4001. Again, that's the number for the Armstrong Advisory Group. You can give us a ring so we can talk this through with you on how your Social Security benefits might be impacted. Again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, why does Japan continue trying to invest in the United States?
because it's one of the most attractive places to invest for just about any investor, and we also have fairly good relations with Japan.
Let me give you a different question, just because the title of this New York Times piece was Why Japan Won't Stop Trying to Invest in the U.S.?
Yeah, I guess the piece here also was, hey, will the Nippon Steel deal getting rejected change Japanese views on investment in the United States? And my answer would be almost certainly not.
Probably not. They want to generate investment returns, and ultimately they view one way to do so as, taking stakes in American companies or buying them outright.
Mm-hmm.
Let me ask you a different question. Why did Nippon Steel want to buy U.S. Steel, given the fact that U.S. Steel has basically said, look, without this merger, we're not sure we're going to be able to continue to exist?
I don't have an answer to that question. Can you tell me?
No, other than, hey, we can operate economies of scale. And
sure.
But it's not, when you talk about, hey, there's better opportunities for growth,
yeah,
U.S. Steel is not one of those
opportunities. Steel manufacturing in the United States doesn't seem like a great growth opportunity, I suppose. But I suppose one way to look at it would be, I'd be willing to bet that if there were one industry the United States government is willing to protect and to subsidize and to fund, it would be manufacturing of steel products within its borders. And so maybe Nippon was looking at it from that perspective as, hey, it might not be a huge growth industry, but we're likely to receive subsidies and basically be guaranteed to find a way to exist in this industry should we stay on the right side of the U.S. government, which won't happen because the U.S. government has now blocked the deal.
Let's take a quick break here. When we come back, let's discuss in a little bit more detail what the Washington Post is reporting about Trump and tariffs right after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The average monthly cost for a private room in New England could double by 2040. So if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. It'll help you understand how to protect your assets and allow you to enjoy your later years. An unexpected nursing home stay could significantly reduce your wealth and prosperity. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. Don't put off today what you might really need to do tomorrow. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Phishing scams, ransomware attacks, and identity theft are three very common fraudulent schemes that can cause significant damage to your financial well-being. Hi, this is Chuck Zodda from the Armstrong Advisory Group. And as technology continues to evolve, it's even more important for you to know how to protect yourself from being a victim of this kind of serious activity. Our new guide is called 7 Common Financial Frauds and Scams, and it's designed to help you understand ways to uncover potential hacks to your most important accounts. These kind of attacks are becoming more complex, so it's critical that you know what to look for before clicking on an email or answering a number you don't recognize. Call us today at 800-393-4001 and request our new free guide called 7 Common Financial Frauds and Scams. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Washington Post citing 3 people familiar with discussions, but who all contributed anonymously, indicated this morning that President-elect Trump is considering a tariff plan that would only tariff targeted industries, but would apply to all imports from all countries. Now, obviously, this would be a departure from the broad-based 10 to 20% tariffs that the Trump campaign had been discussing previously. This piece here says Trump's transition team didn't immediately respond to a request for comment. I can, however, tell you that the president himself, or the president-elect himself, did respond via, I don't know what online portal this was, just because I'm not...
Snapchat.
It was, yeah, Snapface, I believe, or maybe My Chat. But in any case, the president did respond, and I want to get his exact quote right just because it's important. Here we go. The story in the Washington Post quoting so-called anonymous sources which don't exist incorrectly states that my tariff policy will be pared back. That is wrong. The Washington Post knows it's wrong. It's just another example of fake news. So, nobody knows anything.
Yeah, I mean, look, this isn't atypical, especially of a Trump administration.
No.
And, I mean, would anybody be shocked if this did come to pass? I mean, I again...
Which part? The yes or the no?
A pared down version of the tariffs. It would not shock me one little bit were that the case. But clearly, incoming President Donald Trump wants to go to the negotiating table with the assumption that there will be universal tariffs on all countries of 10 to 20%. And if he walks that back a little bit as a negotiating tactic, great. But I'm certain he doesn't want that being reported on and anybody going into negotiations with that presumption. But again, I think you should really, as we've talked about, take somebody at their word. If he's saying,
I've said this for a while,
I intend to impose tariffs of 10 to 20% on every country for all products coming into the United States, then assume that that's going to be the case.
Right. I think that there's a baseline assumption that you need to work from. Now, whether it's the exact amount or whether it's phased in or how it, exactly it ends up playing out, okay, there's room for interpretation there, but the guy's been pretty consistent on this for the last year. The rate has differed, the implementation's
sure.
different. I'm not saying we know any of the specifics, but also look at the people that are coming on board and what they've talked about. The incoming Treasury Secretary has talked about using broad-based tariffs to try to rebalance things from a trade perspective. The incoming head of the Council of Economic Advisors has talked about how broad-based tariffs can, help to reverse decades of trade imbalances. when people tell you who they are, you have to believe them. Now, whether it's going to work or not, I don't know. Like, I'll be the first to admit, I'm not going to sit here and be like, no, this can never work, because I admit that I'm not a super genius who knows everything. It could work, it could go very badly, or it could not be implemented, and we'll never know. I don't know, but everyone has this rush to, like, stake out their claim of, like, where they're going to be and what's going to... Nobody knows anything. Just wait.
I'll stake some sort of claim. Should the seriousness of these tariffs get to the point where markets begin to react negatively, and by that I mean like I'm not talking about, the stock market went down by 0.5% for a day.
You're talking like 10-15% pullback or more.
Then I suspect that there will be some real conversation about watering them down. Until something like that happens, then we're going to continue to get this narrative from the incoming Trump administration, and I think it'll stick that way until there is evidence of people being genuinely concerned about it, and I don't see any evidence of that today.
I'm not sure. I
hear you.
Everyone that I talk to who is plugged into that universe, is talking about how they're resolute and they're emboldened and yada yada.
Yep.
And maybe I'm getting Charlie Browned, but I'm buying that people are underestimating what's going to happen here. The underestimation has me potentially overestimating in the opposite direction.
Could be.
It's possible, but 2 weeks. Well, I don't know if we'll know in 2 weeks.
No, we won't know anything about tariffs.
They're probably not going to announce it like the evening of the inauguration. Would
Likely
be my
not.
guess.
Maybe during a speech.
It's
That'll
possible.
be first.
Just list every country individually.
Wouldn't it be great if just the whole
incoming
inaugural
President
speech
Donald Trump has been listing countries for the last 45 minutes?
Listed 193 countries, and then at the end just 10%. I don't know. I get kind of a kick out of it, but again, I'm the one who wanted the Fed to just raise rates 5% right at the beginning. So.
Indeed.
Let's see. U.S. yields hit 14-month high before $119 billion in debt sales. So we've got bond yields that have been moving up over the last 2 months now, pretty much since the election. They had a brief break in late November where they moved lower, but have resumed their upward move over the last month now. And this is a place where I do think yields may be offsides to the upside a little bit, because everyone's talking about like, oh, the debt's unsustainable and this and that, and there's so much debt that needs to be rolled over, and there's going to be inflation because of tariffs and yada, yada, yada. The number one thing that tends to drive yields in the long run, not like at every week, month, or whatever, is the overall growth rate of the United States. And, Michael, I don't know if you've taken a look at the Atlanta Fed's GDP Now number lately.
No.
I have. I'm the idiot who, on his vacation, gets push notifications from the Atlanta Fed as to what GDP Now is currently reading.
That might be the nerdiest thing I know about you.
If you think I'm joking, Mike...
I'm not. Don't even,
Mike, what is
for
this,
a moment believe that you're
Mike,
joking.
what is this one from Friday at 11:29 a.m. read right here? Just read it. It's the second from the bottom.
Your screen blanked out, so I can't. So
okay.
We'll try that again.
No. Here you go. It's coming up in just a second.
I'm more surprised they send out notifications in the first place.
Here you go. The one that says Q4 GDP growth estimate.
Q4 GDP growth. On January 3rd, the GDP Now model estimate for real GDP growth in the fourth quarter of 2024 is 2.4%, down from 2.6 on January 2nd.
Thank you.
That is exciting stuff.
So that's what I get when I'm sitting by the pool.
Yes.
Which I kind of like because it keeps me plugged in. I turn all my other notifications off, but I keep the Atlanta Fed. Really like those guys.
Yeah.
Anyways.
True super fan.
So, actually, I don't want one of them, but the St. Louis Fed does make T-shirts.
Yeah.
In any
Tough
case.
to get.
In early December, GDP Now was showing 3.4% growth. It's now at 2.4%. There has been a deceleration in the data over the last month, and bonds are not picking up on it. Whether that's proven right or wrong, we'll see. But growth does appear to be slowing now, and bonds are moving the other way. Quick break here. We've got more financial exchange coming up.
Did Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other. and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, Tucker with you, kicking off hour 2 of the Financial Exchange. Stocks mostly moving up. The Dow is up 211 points today. S&P 500 is up 70. NASDAQ's up 371. 372 now. 373. Not bad for a couple seconds right there, huh? We got the 10-year U.S. Treasury. That is selling off just a touch, down 3.7 basis points to 4.632%. Oil, West Texas Intermediate, continuing its recent run up, but not by too much today. Only up 17 cents a barrel to 74.13. We got gold down $9.80 an ounce to 26.44 and 90 cents. And the AAA national average for gas prices moving back up as well. We never got below $3 nationally, which is it's my great regret for 2024 is that we didn't get to say like $2.99. Everyone has regrets about years.
Sorry, can you expand on that? What was your regret about gas prices in 2024?
That the national average didn't get below $3 a gallon.
Oh, okay. Yeah.
What'd you think it was?
I missed that for a minute there. Yeah, okay, got it.
Yeah, we were just floating around like 302, 303. We could never punch through, at least nationally. So today back up to 306 and 4/10, another 0.3 of a cent up, and that's what we've got going on in markets here. Speaking of markets, piece from Michael Santoli on CNBC.com. Stock market is losing juggernaut status as 2025 begins, but it doesn't mean the bull is over. And Santoli and Connor Sen, by the way, had this on social media first, so there's a little bit of a competition to see who's getting credit for this metaphor, actually. But basically, people are saying, hey, the stock market right now is like the Kansas City Chiefs. It's won the last 2 Super Bowls because, the market's been over 20% gains in the S&P 500 the last 2 years, so it's done well. It's still undefeated to start this year, but it doesn't quite feel the same, is the point Santoli makes, kind of like the Chiefs. Like, yeah, they're 16-1 heading into the playoffs. 15-2? Did they lose yesterday?
Yeah, they got smoked yesterday.
Who cares what happened yesterday?
I do.
Oh.
In either case.
Who'd you have?
The Chiefs.
While I might,
sorry.
Well, I might not have a lot of context to add on the Chiefs comparison. I can assure you that I've been to Kansas City and nobody sounds like that there.
Well, no, it's not a Kansas Cityan.
Okay,
that was like a football.
Oh, okay.
Thing.
Got it.
That was that was the bookmaker that Tucker.
Got it.
No, in any case, so. You've got a market that has rallied the last 2 years strongly. And look, people are looking at the foundation now saying, hey, it's expensive. Everything's priced in like it's going to go, great. Things have, maybe gone a little bit too far. And it's kind of where people are with the Chiefs. Like, I'm just going to finish the metaphor. Travis Kelce, not what he used to be. Patrick Mahomes, not putting up the numbers he used to. Speaking of, wasting money in, sports, horrible fantasy pick for me this year. You don't pick Patrick Mahomes this year because the Chiefs aren't what they used to be. But how do you bet against them is the other question that you look at. And it's kind of the same thing that people are saying with stocks now, which is, yeah, it might not look great, but how do you bet against it? I'm not saying that that's the outlook you should have, but more that's where
seems
a lot
to be
of
the
investors
narrative.
are right now.
To continue that, like, hey, 5 years from now, I'm not sure what it's going to look like, but 2025, tough to bet against that.
You look at the consensus estimates for the S&P 500 for this year, and if you look at, I think the average investment banking growth, like S&P 500 projection, is for like 12.5% growth.
Yeah, I saw somewhere in the 10% range.
There's no one saying that the market's going to struggle this year.
Yeah.
And so this is kind of where you find yourself, which is, hey, what do I do here at this point? Because everything has just pulled this market up for the last 2 years. And sure, you've got a new incoming administration that's, promising to be friendlier to business and so on, which, again, kind of tough to bet against, an administration that's saying those things. But also, if the slightest thing goes wrong, you've got a market that is not priced with a lot of caution in it.
Yeah, so let's talk about indicators that are useful and not useful. They point out, or Michael points out in this piece, that January performance has tended to be poor after a 20% annual gain in the S&P 500. Useful or not useful statistic?
Not useful.
Years after an abundance of record highs, 2024 had 57 separate record highs, have likewise been tougher, and the first year of a new president's term tends to not be the most rewarding. Again, maybe the presidential stuff you can pull some decent statistics out of, but I'm not sure that there's anything to a high number of record highs contributing anything to the next year's performance.
Here's the big thing about 2024, and here's where the rubber actually meets the road on this stuff. 2024 was not just a year of great performance, it was a year of great risk-adjusted performance. And by that, I mean there was almost no volatility. You had a 10%
straight line upwards.
You had a 10% dip in August where everyone became yen carry trade experts overnight. Other than that, you did not have a 10% dip in markets. You remember that whole episode?
I do, and I'm just like, yen carry just sounds like someone's name, so I was just kind of confused for like half a millisecond there, and yeah.
But everyone became experts in the Japanese yen carry trade for, a period of a week. Other than that, we had a few like 5 to 7% pullbacks, but there was very low volatility, and the number one driving force behind that low volatility was there was very low equity correlation throughout the year. It was, hey, the first half, tech stocks are leading, everything else is just kind of meh. The next 5 months, 5.5 even, tech stocks are struggling, the other stuff is, moving around. Utilities are, the leader in the clubhouse for like 4 months. The last month and a half of the year rotate back into tech, but small caps had it was a market that did not have any consistency amongst who was pulling it forward, and so it was a very low volatility year. The data that's out there when it comes to volatility is that low volatility is not the norm, and specifically low correlation is not the norm in equity markets. They tend to become more correlated over time, and they tend to see higher vol when they become more correlated. So I'm not saying this from the perspective of, hey, this is inherently bad. Remember, volatility cuts both ways. People think of it as just being a downward move. Volatility is just, hey, how much are you moving, not what direction is it in. And so I think that for 2025, if you want my honest opinion, you got to be more prepared for tail outcomes on either side. There's a possibility that the S&P 500 rips another 25-30% here. It's a legit possibility.
Sure.
Hey, you get, tax cuts, deregulation, inflation doesn't spike as a result of this, the tariff implementation goes well. Great. S&P 500 at, 7,800. Not out of the question. Counterpoint, though. Hey, if some of this stuff goes badly, S&P at 4,200, 30% pullback, also very much a possibility.
And by the way, we tend to think about these outsized years that we had for the last 2, or the really devastating years that we all experienced in, say, 2009 as the irregular ones. Taking a look at 100 years worth of data, markets have gone either up by 20% in a calendar year or fallen by more than 20% in a calendar year, a little bit more than a third of the time. It's not irregular.
No, and we talked about how, look, even if you expect your long-term equity returns to be, between 8 and 10%, equities almost never return 8 to 10%.
No.
It's usually 15% plus or 15% minus. There's a handful of years, 10 to 20% of the time, but it's not a distribution that is, concentrated around like 8 to 10%. It's much more, hey, you tend to either make a lot of money or lose a lot in stocks in a given year. And this year, to me, I think it's that, but extended even further, in my opinion, as the possibility. I think there is a really wide range of outcomes this year, and investors need to be prepared for that. Let's take a quick break. When we come back, we've got trivia, and then we'll talk about how the Fed is approaching the new year as well.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The average monthly cost for a private room in New England could double by 2040. So if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. It'll help you understand how to protect your assets and allow you to enjoy your later years. An unexpected nursing home stay could significantly reduce your wealth and prosperity. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. Don't put off today what you might really need to do tomorrow. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange. And on this day in history, one of the country's greatest presidents passed away. The president in question is the only U.S. president to have won the Medal of Honor. Trivia question today: which U.S. president is the only to have won the Medal of Honor? Once again, which U.S. president is the only to have won the Medal of Honor? Be the 7th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the 7th correct response to text us at 617-362-1385 will get that Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, I came across something during the break, and I showed it to you, and we've got to take a little bit of a detour on this. So
it's job market week, so this is in theme.
It is. So ZipRecruiter has a page on it where you can find salaries for any job, and you can put in basically whatever you want, and see what happens. So if you go to ZipRecruiter.com, and then at the top there's a button that says salaries that you can put in. And once you click on that button and get taken to the page, you can type in anything. So, Tucker, give me a completely made-up job that has no basis in reality.
AI brisket slicer.
Okay. So if you put that in and hit enter, it gives you the distribution of AI brisket slicers nationwide and in your market. And according to ZipRecruiter.com, the average salary nationwide for an AI brisket slicer is $31,238. So you don't get paid well in that role.
No.
But on the other hand, if you go and say, hey, I want to be a
potato mining engineer,
moon mining manager with shrimp.
Oh.
The nationwide average is $61,351 to do that. If you want to be a cheese petter, so you want to get paid to pet cheese, ZipRecruiter says, hey, you can get paid $38,409 a year on average, including there's some people, 3% of jobs pay over $67,000.
Do they have geographic? Can I put in a New York City giraffe walker?
Yes. So if I do, let me do New York City. So Manhattan or just New York?
Manhattan.
New York? Manhattan. Okay. And you want to be a giraffe walker?
Yeah.
Okay. Hold on. Let me go back. Because you actually have to do it from the salaries page if you type it into the search somewhere else. So giraffe walker.
Yeah.
It's a big leash.
In Manhattan. Oh, they might have just fixed it. Hang on.
They just fixed it?
They literally might have just fixed it.
I doubt it.
I'm gonna try one more thing.
Well, I typed in whale washer, not watcher, and it came in as $42,000 a year.
Ooh.
Wash the whale.
Honestly, I think it's something with giraffe. Giraffe is the one that doesn't work for some. So maybe there's a limit in that you can't walk a giraffe, Mike.
Right.
Obviously,
silly goose.
I didn't think you could mine on the moon with shrimp, but apparently you can. So I think the conclusion here is a good reminder that don't trust what you read on the internet.
I just typed in goose walker, $263,000 a year.
Goose walker?
Yep, walking that silly goose.
Is that for like Goose the animal? Goose the fighter pilot?
Or Goose the band?
Or Goose? These are questions that you wonder about.
Yeah.
Right.
Wow.
But
something's off.
So ZipRecruiter, I'm going to guess, by the way, I'm going to guess poor use of generative AI would be my guess on the back end of ZipRecruiter's website.
Almost certainly. Because here's the interesting thing. It's not the interesting thing because I don't know that there's anything that interesting about this other than, hey, you really wouldn't expect a website like ZipRecruiter to have this kind of issue. The jobs that then get listed like under the category. So if you, again, Goosewalker, which again sounds like a great job. Nationwide, the average is a little bit lower. Okay, there's nothing that comes up as even a comparable. But for other things, like I would, again, the moon mining manager with shrimp, which sounds like something you would order, not a job. Again, these are the things that come up. It's like nearby moon mining manager with shrimp jobs. A New England outside sales territory manager for Agsco Manufacturing. Okay, I kind of get how they might get there, maybe. A civil engineer at Jobot. Okay, like, kind of. This one. Bar manager at Kitchen and Cocktails by Kevin Kelly. Probably not, in that category, but again, shrimp probably throws it off, but it's clearly a generative AI thing where it's like, here are the words that are similar to this, and
build us a chart with some salary information, and that is, again,
this is why I think generative AI is not ready for prime time. This is a public-facing website, Mike. We're talking about this in front of thousands of people right now.
Right. The uses where generative AI is completely falling down are in areas like search. The areas where it is really becoming useful and helpful is in areas where a worker is using it on the back end to come up with conclusions and come up with work that they are then cross-checking and presenting to somebody. But the idea that generative AI is going to do away with Google in some way, shape, or form is I won't say years ahead, because the pace at which this technology is developing is quite impressive, and I have to acknowledge that. But it does not seem like the thing that we should be concerned about. We should instead be concerned about those workers who are not going to get their jobs anymore, because coders can be 30% more efficient with generative AI.
How do we? Where do I apply for one of those goose jobs?
I don't know that you're going to be able to support a family on
down
it.
the street.
Wait! Oh no, that was the one that was like $260,000. Yeah, okay, that does sound like a relatively stress-free environment.
To be fair, you ever been around geese?
A lot of poop. Yep.
Not the nicest either.
Very nice. Very not nice animals.
Not the nicest animals.
Yeah, they'll hiss at you.
A lot of poop and not nice.
Yep. Yeah.
You know, generally something you try to avoid. Taking a look at markets as we head towards the bottom of the hour. Dow is now up 324 points, continuing to rally. S&P is up 74, NASDAQ up 359. So a broad-based rally taking place here, but led largely by tech companies. If you actually look, you do still have a little bit of weakness under the hood here. Utilities getting whacked today. The utilities sector down as a whole. Telecoms getting whacked. Beverage and tobacco companies are falling. I don't know why, but they are. Banks struggling a little bit, and drug makers struggling a little bit today as well. But overall, decent amount of green on the board, led by NVIDIA, Google, Meta, Microsoft, Amazon, and Apple. Let me know if you've heard any of those names before. We are going to take a quick break here. When we come back, again, we had to detour into that ZipRecruiter piece just because
it was worth detouring, and it might fix it at some point.
Maybe they'll fix it now. We will get to a little bit of talk about the Fed after this. We've also got the trivia answer coming up next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other. And receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hi, it's Chuck and Mike from the Armstrong Advisory Group. Our guide this month is the 7 common financial frauds and scams. Mike, one of the ways that fraudsters potentially get your information is through something called a phishing, with a PH, scam. What is a phishing scam?
Yeah, again, a misconception here from a lot of folks. When they think about getting hacked, it's, some cyber criminal that's gaining access through a back door to your information. Usually that's not what happens to companies or individuals. It's usually I fell victim to something that looked legitimate. And so a phishing scam would be when someone posing as somebody else, FedEx or the United States Postal Service is a common one. They send you a text or an email saying, you missed your package delivery, sign in here to get access to it. And you end up actually giving the fraudster your own personal information.
In terms of being vigilant against this, how do people start to protect themselves?
Quite honestly, it's so prevalent these days that my general feeling is that you have to treat every phone call, every text message, every email you receive on a day-to-day basis as though it is a phishing attempt. And until you're able to prove otherwise by calling that person at their known address, by looking up your bank's contact information rather than trusting that it's actually somebody from that bank, you have to assume that it is a fraudster, it is a scammer trying to get access to your information, and be vigilant and suspicious.
Our guide is titled The 7 Common Financial Frauds and Scams, and it details phishing scams and a host of other ones. You can request it by calling 800-393-4001. The guide has information to help you make more informed decisions to protect yourself and can be requested by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
Trivia question today was, which U.S. president is the only one to have been awarded the Medal of Honor? That'd be Teddy Roosevelt, who won the Medal of Honor for his courageous charge up San Juan Heights during the Spanish-American War. Roosevelt is the only person in history to win their nation's highest military honor and the Nobel Peace Prize. Winner today of the Financial Exchange Show t-shirt was Susan from Methuen, Mass. Congrats to Susan. We're taking home that Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, what do we got from the Fed in terms of Bill Dudley, who used to be at the Fed? He ran the Federal Reserve Bank of New York for about 10 years. He was talking about how the Fed can improve their communication heading into this year.
He does, and he talks a lot about how they have this flexible inflation target, these individual growth projections, and so there leaves, I guess, a lot of room for misinterpretation in terms of how the Fed plans to react to things, and I think it feeds in. The perfect example that I can think of all of this is going into 2024 when the Federal Reserve had very specific expectations about inflation, growth, and unemployment. The economy proved to have higher inflation, lower unemployment, and yet the Fed cut interest rates more than they were anticipating doing. And so you think about all that logically, and it doesn't make sense from where they were on January 1st. And under the surface, it probably speaks to a lot of what Bill Dudley's talking about here as well. They have these other economic models that speak to what they think is going to happen, but don't do a great job of setting those expectations with the public and explaining them very well. And I don't know what you change about the framework to make that better, because I think a lot of it has been about inconsistencies in the chair's, Jerome Powell's, speaking engagements when it comes to addressing the nation on their policies.
Yeah, I just think I think there's too much focus on communication now, and I know that that's how they want to try to push policy at this point is say more and do less, like have the market do its work for them. But ultimately, I just don't know. I don't know that there's the marginal benefit that you get from more or
more
different. I just don't know that it's there at this point. And it makes us too focused then on, trying to interpret every little word instead of just, we did this and you got to deal with it. We don't all need to feel like we're on the Federal Open Market Committee. We're not. We're not. Just tell us what you're doing and do it. And if you do a bad job, then you'll be remembered as someone who did a bad job. And if you did a good job, you'll be remembered as someone who did a good job. But
it's been strange over the course of the last few years because, generally speaking, since the early mistakes of the Fed in 2022 and 2021, the results have been fantastic, but I think the messaging has been not helpful. And so I'm judging on these dual sides. We're like, hey, it's tough to argue with the results. The results have been unemployment that stayed around low 4s and inflation that's come in around 3. That's a pretty darn good result compared to where we were in 2022. But the messaging around it and the guidance and the explanations as to how we're getting here and how we're going to remain here, I think have been confusing.
But I'll give you an example. We get this piece from Bloomberg, another one. Fed's Daly and Kugler stress that inflation fight has not yet been won. Well, how about instead of telling us this, just raise rates 0.25%? Why do you have to tell us this? It's because they don't want to actually undertake those actions and they want the market to make the move for them.
Right. And furthermore, if you believe that the inflation fight has not yet been won, then I need a little bit more context as to why you voted for another rate cut on December, what was that, 13th? 16th, somewhere like
17th, yeah.
Those two things don't really play well with me. So what's the story? Why did you do so? And it comes back to, R-star, the neutral rate, all these kind of complex topics that I don't think they do a great job of messaging.
But it's also trying to manage a central bank this way is very much an elite problem. And what I mean by that is if you're the central bank in Brazil or you're the central bank in South Korea, if the bond market moves against you, you're basically like, okay, I got to do what I got to do, otherwise I lose credibility.
Yep.
You can't talk your way out of it.
Right.
It's only by virtue of the United States being the United States that you can even consider this. The only other place on the planet, there's two. The only other two places on the planet that can consider this are Europe and Japan. There's no one else. And even Europe getting kind of dodgy in terms of, how the euro's being used internationally these days. So I look at this and sure, you can try to talk your way out of it, but eventually the market's going to force you in ways that you don't anticipate. And you're going to have to just do what you're going to have to do. And no amount of talking is going to get you out of it. So it's kind of where I am, I think.
According to Genworth, the average monthly cost for a private room in New England could double by 2040. So if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. It'll help you understand how to protect your assets and allow you to enjoy your later years. An unexpected nursing home stay could significantly reduce your wealth and prosperity. Call Cushing & Dolan right now at 866-848-5699 and get your free guide. It's called Long-Term Care Planning for Procrastinators. Don't put off today what you might really need to do tomorrow. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online at their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
I'm really happy we get to discuss this next piece, actually, because I think it's a really interesting one. In some ways horrifying, in some ways exciting. it's from the Financial Times. It's titled Private Equity to Lobby Trump for Access to Savers' Retirement Funds. And basically what it's talking about is that the private equity industry wants to find a way to get its investment options into 401k plans.
Or just retirement accounts and investors that are, at least according to most regulators, considered less sophisticated than the current typical private equity fund investor. To invest in a lot of these places, you need to be deemed an accredited investor by, I believe those are SEC standards, meaning you have to have $1 million in investable assets and or $200,000 of income. And there's a whole swath of people that don't meet those standards. And it appears nowhere in 401ks, regardless of your accreditation status.
So, couple things here. First, when we talk about like accredited investors and this and that, there's a case to be made that why aren't you allowing a broader swath of people to access, these types of things?
I would completely agree. We've talked about this, but it's been a while. I mean, if you want to pave a path where someone doesn't meet those standards and instead goes and educates themselves on how private equity investments works and earns their accreditation status to
you
be able to invest in these things.
a 6-hour course or something like that.
And arguably, given the incentives there for people to sell these types of things to accredited investors who don't know what the hell they're buying, there might be a case for doing that anyway.
Right. Does anyone think that like wealthier people are just smarter? I mean, I'm like
not a lot of evidence.
I'm not saying they're dumber. I'm just saying, hey, like smarts and financial wealth are not tied together necessarily. Like it's not one and the same. Like, sure, you can be correlated in some ways, but like quite honestly, I know some people that are not like the smartest as far as like if you ask them very basic math questions and stuff, they'd struggle with them.
Yes.
But they've made large amounts of money because of acumen in other areas and whatever it might be. I guess that's what I'm getting at. So on one hand, you look at this and you're like, sure, why should investments with, the types of return that private equity can generate sometimes, why should it only be limited to those who are very wealthy? The reasoning that's justified it to this point is that historically, these have also been some of the riskiest investments for a couple of reasons. A, they may hold, investments that are illiquid, so you don't have access to your principal. They may employ large amounts of leverage, so you have the greater risk of wipeout. There's all kinds of potential downsides.
They're riskier, and by and large, they don't have the same requirements about disclosures, so you won't see the same things that you get out of a mutual fund prospectus when you talk about a private equity investment.
Correct. So this tends to lead you to, okay, if you're talking about people's retirement, sure, they have this potential upside, but if the downside risk materializes, that risk doesn't leave the system. Now you've got a whole bunch of people where their retirement, if things go badly, is compromised. And what do you do then if you have a bunch of people that committed their retirement into these things and now are out of luck because their 401k is worthless?
Or even if it doesn't all fall apart, even in somewhat stressful times, there are severe liquidity issues and things that aren't a great fit for retirement accounts. If you think about 80-year-olds who have required minimum distribution requirements and at the same time have a bunch of their money in private equity, that could be a real problem. So I think where both of us are landing here is that I think it's perfectly reasonable to have a conversation and debate about who should be eligible to place money into these things. But purely deregulating it and saying, yeah, any financial advisor out there can go and sell private equity investments to the general public in their retirement plans is a really dangerous path that I don't think you want to go down.
Here's the other place that I'm going to go with this. Number one, if you're talking like 401ks, how many 401k fiduciaries are just going to be like, yeah, sign me up for like this kind of risk?
Right.
It's a little like as if you're a fiduciary managing that 401k plan. Okay, you're held to a really high standard.
Yes.
You're going to just take on that kind of risk. How are you going to manage it? If, again, you talk about, these funds tend to be illiquid. Hey, if someone wants to start withdrawing funds, they can't just do it pro rata.
Right.
How do you manage those types of things? The other piece on this, and this is where I always go, is, look, private equity and private credit and, hedge funds and this and that, they don't want to have a lot of $1,000 clients.
Right. That's why the 401k space makes sense.
That's not their business. It's not that they don't like you. It's just they don't want you. It's not what their businesses are set up for. They're not set up for large scale record keeping and this and that. They want.
It's not Robin Hood.
No. So the question that I always ask is, when they start talking about doing this, why are they doing it now? Have they, again...
Well, I mean, very clearly because Trump administration is coming into office and is in favor of deregulation and,
Maybe, but even for this entire year, you've been seeing, Apollo and other managers trying to start up, private credit ETFs and interval funds and things along these lines, and you're kind of why are they pushing it on the retail person? Because the retail person gets burned on these a lot of times after everyone else has made their money.
Last one to the punch bowl is the argument.
That's kind of how I feel sometimes, and so it's another thing that just gets my antenna up and make me go, we'll have to see if this is actually a good idea or not. Let's take a quick break. When we come back, Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
Mike, what do you got for Stack Roulette?
Interesting generational stuff when it comes to investing right now. I remember in one of my first jobs at a financial services company, I was taking a look at trends when it came to millennials and their investing habits. And millennials came of age or entered the labor force around the Great Recession, and their investing habits tended to follow that. They were more interested in large blue chip dividend paying stocks, and at the time I distinctly remember speaking to somebody who, I think I was still a college student at the time, who was pointing out that that's not the usual and recommended path for somebody that's 18 to 25 years old. Sure. You would want to be a more aggressive investor at that stage, and yet they are quite conservative. Gen Z also appears to be a product of their time and have gotten started investing earlier and more aggressively. On average, Gen Z, those born between 97 and 2012, started investing at age 18. Millennials started at 25, Gen X started at 32, and Boomers started at 35. So I can take some good news from all of this. The bad news would be that anyone that's invested long enough knows that these things also go down. We have always had a period of time where stocks boom and then bust. And Gen Zers are getting started earlier, hopefully with money that they have that they're able to actually save, but will likely be subject to one of these bust cycles at some point and are likely invested more aggressively than their previous generations at their age.
Yeah, it's, again, volatility in these markets, it's a feature, not a bug.
Yep.
And thus far, most of that volatility has been in the upward direction. But look, 2022 was a brutal year for Gen Z investors who might have been starting out. Hopefully they didn't get too discouraged and didn't lose all their capital and, are able to learn some lessons and continue on. But it can be tough navigating those waters, early on. DraftKings is putting out a subscription service. It's going to be called DraftKings
Gamblers Anonymous.
No, that's actually a thing. It's called DraftKings Sportsbook Plus because we just need another plus here. Mm-hmm. And I'll quote from MarketWatch. Members would have access to stepped-up boosts for all parlays where the individual legs are minus 500 or shorter. 2-leg parlays will see profits increase by 10% as part of the membership, and the boost will grow as the parlays get bigger. A parlay with more than 10 legs will have the profits for the bettor doubled. So,
I knew 3 to 5 of those words.
Mike, I know very little about betting, and Tucker's probably going to be like, you're all wrong. Tucker, am I correct that if you're betting 10-leg parlays, it's basically as good as giving your money away?
Correct.
First of all,
it's extremely rare for a 10-leg parlay to hit.
Beyond that, here's the thing. You could hit on 9 of these, meaning that you were right most of the time, and if you lose that last one, you get nothing. Yeah. So it doesn't even reward someone with good skill. It rewards someone with luck. It is it's gambling on gambling is the way that I would put it.
And you pay a subscription fee for access to this.
they're not doing this out of the goodness of their hearts. They're not doing this to make you money. They're doing this to make them money. They've run the numbers, and you better believe, hey, if you're good at this, they're going to throttle how much you can win because that's what they do.
They'll just limit you, yeah.
So, there's that. Quick break for the rest of the day. We'll see you tomorrow on the Financial Exchange.